Switzerland, more formally known as the Swiss Confederation, is a small country in Europe with over 9 million residents. While the country has amazing scenery, such as its carved Alps, sweeping valleys, and vast lakes, Switzerland is also known for its level of neutralities and wealth. In 2022, the country had the highest wealth per adult in the world, making it one of the wealthiest countries in the world. Switzerland.
Swiss government operates under a two-chamber system, the National Council and the Council of States, and they're overseen by the Federal Council, which is a seven-member board that includes a Swiss president. The Swiss president serves a one-year term, and they rotate every year throughout the seven members on the federal board. This system's been a thing since 1874 and has held true since then, which makes Switzerland one of the most stable countries in the world. In terms of Nestle, this means they have almost no political risk domestically at home. Nestle is, however, exposed to a lot of political risk abroad. They do the majority of their manufacturing and sales outside of Switzerland, and they manufacture in 189 different countries and have over 400 factories. They also do sales in well over 100 countries as well. This vast scale opens them up to a lot of political risk, as each country they do business in adds more risk on. A good thing, however, is this scale also gives them a natural hedge against political risk, as unlike smaller firms, political unrest that causes the stop of manufacturing or sales in a single country will not bankrupt Nestle as it would a smaller firm. The company does business in Latin America, South America, and Russia, which have a long history of or are currently in a state of political unrest. And talking about Russia, in the last 5 years, Russia was a big impact on Nestle, as at the outbreak of the war, Nestle stopped all manufacturing and sales in Russia of non-essential goods, a business that brought in 1.7 billion Swiss francs in 2021. They kept selling essential goods such as baby food, but this is still going to hurt revenue in a drastic way for Nestle. Brexit is another example. Brexit began in 2018 and put a lot of supply chain issues and manufacturing bottlenecks on exports and imports out of Britain. Nestle considered moving all their manufacturing in Britain to Eastern Europe in 2018 in a drastic fashion. They did not do this as quickly, however, this year they removed their factory and fought in England, and next year plan to remove their factory in Newcastle as well and move the business to Eastern Europe. This is a direct effect of Brexit, and while we cannot see on the balance sheet how this is going to affect them, as their financials for the year are not out, it more than definitely is going to have an impact. Nestle is also a food and beverage company at its core, which means they're open to a lot of restrictions from other countries that other companies are not. In each country they do business, they have to follow and abide by all the restrictions. And in heavily restricted countries such as the United States, it's very pertinent. In California, Nestle had to pay a higher expense on the bottling of drinking water in a spring after new environmental laws were passed. This used to cost them next to nothing, but after laws are passed, they had to pay a large sum of money, which raises the expenses on Nestle's account.
In 1850, Switzerland adopted the Swiss franc as its official currency. The currency is issued to users through banknotes with 6 denominations: 10 francs, 20 francs, 50 francs, 100 francs, 200 francs, and 1,000 francs. The Swiss franc is the 7th most traded currency in the world due to its strong liquidity and Switzerland's stable political system. This also leads many governments and financial institutions to hold the franc as a hedge against instability in many types of investments and markets. Switzerland's economy works to keep its country wealthy and its currency strong. It has one of the most advanced free market economies in the world. Switzerland's GDP is approximately 808 billion, while its GDP per capita is above 83,000. The country holds low unemployment rates and skilled workers, allowing it to have one of the highest gross domestic product rates per capita in the world. Low corporate tax rates, a highly developed service sector, and a booming manufacturing industry help fuel the strength of Switzerland's economy. Surprisingly, the country was able to maintain a low level of public debt even through the COVID-19 pandemic. This alone sheds light on the stability of the country's economy. Last year, the country recorded a government debt to GDP of 41% and has maintained a strong average debt to GDP rate of approximately 48% since 1982. Low corporate tax
As mentioned before, Switzerland has a very strong economy. This is because they are net lenders to the rest of the world. Net lenders are countries that are building up their wealth by the government putting their financial resources to other sectors through exports and more. They also have a current account surplus, which means they have more exports and incoming payments rather than imports and outgoing payments to other countries. They have also had this current account surplus for 20 out of the past 23 years. Nestle, being the largest food distributor, contributes to their economy significantly. In 2017, Nestle was able to collect metrics on how they positively impacted the Swiss economy. They had an 85% export rate on products produced by 11 manufacturing plants owned and located by Nestle in Switzerland. With this turnover, Nestle invested 289 million Swiss francs in production and infrastructure. They also funded 57% of Switzerland's global research budget. And Nestle is one of Switzerland's largest taxpayers, and they create hundreds of thousands of jobs for their citizens.
The Swiss franc has a long-standing history of being a strong, reliable currency. This is thanks to a number of factors, but some of the most important include Switzerland's strong economy, its stable politics, its ability to avoid foreign conflicts, and its ability to control its monetary policy through its central bank, the Swiss National Bank. For all of these reasons, the Swiss franc has been labeled in the past a safe haven currency. This is a status given to currencies in which investors flock to during periods of economic uncertainty, such as high inflation or global recession. On the graph to the right, you can see that the Swiss franc appreciates greatly against the dollar on two occasions in the past 5 years. That is following the onset of the COVID-19 pandemic in early 2020 and in the past 18 months when global inflation has risen greatly. In the past few months, the Swiss National Bank bought $900 billion in foreign currency to alleviate some of this upward pressure on the Swiss franc and help out some of its domestic exporters. Another reason for the Swiss franc's continued strength versus the United States dollar has to do with the nation's current account surplus. Switzerland has run a current account surplus for 20 of the past 23 years. By contrast, the United States has not run a current account surplus in the past 30 years. A surplus occurs when a nation's exports exceed its imports. For Switzerland, some of its greatest exports include its financial services industry, luxury items and clothing, as well as, of course, chocolate. Now, a strong currency and an appreciating currency creates a number of challenges for domestic companies looking to export. This is because a strong currency makes it more expensive for foreigners to buy your products. The vast majority of Nestle's revenue comes from outside of Switzerland, so this presents an acute challenge for Nestle. The safe haven status also has a compounding effect on Nestle's bottom line. This is because the Swiss franc appreciates at the same time that global economic conditions worsen. So when this happens, Nestle has to face both a weaker market in which they can sell their goods, as well as pricing pressures because their goods are now becoming more expensive. So they're getting squeezed on both ends. Therefore, a proper hedging strategy is required in order to mitigate some of these effects, which will be discussed later on.
The company we chose to analyze is Nestle. Nestle is the largest company in Switzerland and also the largest publicly held food distributor worldwide. There are 275,000 current Nestle employees, and the company was founded and is headquartered in the town of Vevey in this region of Vaud in Switzerland. It currently trades as an ADR on away from the 6 stock exchanges of Switzerland on the New York Stock Exchange, the London Stock Exchange, and etc. The current stock price is around $113 to buy an ADR of Nestle on the New York Stock Exchange. This, of course, is a 5-year value chart of the Nestle stock on the SIX Swiss Stock Exchange. As you can tell, during COVID, early 2020, the stock dipped. However, it was able to recover and get up to around 130 Swiss francs per share. And in recent times, the stock has dipped a little bit, probably due to the tumultuous nature of the wars going on across the world. Just like every other multinational corporation, Nestle has to protect against foreign exchange exposure. A way they do it is natural hedges. This isn't too hard for Nestle as they have business in 188 countries on all 6 livable continents in the world. So in 2022, you can see that all this risk was mitigated due to the balance on average of all these regions. And they actually had a gain of 0.1% on their foreign currency. In 2023, the low region, was the Asia Oceania region at 12.1%, but the average was a loss of 6.7%. So this was somewhat mitigated, but you will see profits in some years and losses in some others. Another strategy that Nestle takes to hedge against foreign exchange losses is forward hedging. For example, in 2020, Nestle dealt with 7.9% in losses due to foreign exchange on sales. So going to the next year, they predicted that the market would rebound, and they decreased their forward hedging position by 3.5 billion. Their prediction was correct, as it was a 1.3% decrease rather than the previous year's high total of 7.9%. As we all know, Nestle is an extremely globalized corporation that does business in 188 countries in the world on all 6 habitable continents. However, to maintain this economic stability and growth, Nestle has decided to invest in many conglomerate subsidiaries such as Gerber, L'Oreal, and Purina, which have further enhanced their financial status. For example, Nestle sold 3.2% of their stake in L'Oreal in 2021 to free up liquidity, likely because of COVID losses. And Purina has a pet product sales revenue of more than $20 billion.
Nestle reported a 9-month sale recap, and total reported sales decreased by 0.4% from 69.1 billion Swiss francs in the 9-month report of 2022 to 68.6 billion Swiss francs as of September 2023. They still have the fourth quarter to increase their sales and perform better than 2022, which was not a great year for Switzerland's economy, especially in quarter 4. They had 0% growth in GDP, which indicates a stagnant economy performing below its potential. However, the CEO of Nestle has high hopes for 2023 and the near future. In quarter 3, Nestle acquired Grupo CRM, a premium Brazilian chocolate company. Nestle expects organic sales growth roughly between 7% and 8%, and an increase in the trading operating profit margin between 17% and 17.5%.